Hello and welcome. This is KYC, a brand new show on NDTV Profit. Now, in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today we have a very, very interesting NBFC. That's Muthoot. Now, this is, as I mentioned, a non-banking financial company, but the focus here is gold loans. In fact, that's its core service. Gold loan is its core service. It predominantly operates in the south of India, and it operates in various businesses which will include not just gold loans, but affordable housing, microfinance, vehicle finance, insurance broking. But as I mentioned earlier, the focus essentially, largely, is on gold loans. Now, it is present in 29 states and union territories. It has about 4,800 branches across and assets under management of around a little over ₹1 lakh crore. Of this, the gold loan AUM stands at around 86,000. So about 85% odd of the AUM is gold loans. In terms of its mix, in fact, let's come down to that. 83% gold loans now, microfinance coming down to 9%, and then the balance, you have home finance, vehicle finance, etc., and others. But as we usually do, we rate the company based on parameters from the past. So we talk about the income statement, we talk about the balance sheet of the company, how it's done, and we'll give it a thumbs up or a thumbs down based on the company's performance. Well, of course, besides that, we're also going to talk about the shareholding pattern, what the street makes of it, how the company has done, as well as the valuation picture. But what we also do follow through is that we get in the in-house expert on that to help us, decipher a lot of these parameters. And as far as Muthoot Finance is concerned, we have with us here Harsh, who's going to perhaps join us and give us a better understanding. So Harsh, welcome. Thanks for joining in. Let's start by taking a look at the income statement, the key parameters here.
Yeah, let's start off with that, Agam. Going to start off with the net interest income number.
Yeah.
And that number hasn't grown significantly over the last 3 years. You'll see a sub 9% kind of growth. Now, the AUM in contrast, and we'll come to the balance sheet numbers as well as part of this analysis. But the AUM has grown at a far more healthier clip. Why is this so? Why hasn't top line really followed suit? Is because competition within the gold loan space has really intensified over the last 2 to 3 years, especially over the last maybe 5 years odd, where banks have started to come in and lend. You're seeing the likes of an SBI, a CSB build large components of gold loan book relative to the growth that they've had. And therefore, you're starting to see that opportunity being bought into by others. Plus, it's a secured business, and therefore, the yields can come off fairly quickly. And that's exactly what's happened. Yields have come off from 22% odd to nearly 17% over the last 3 to 4 years. And that impact is visible here as well as on the bottom line. But provisioning has more or less sustained. So there's not been any huge spike in provisioning. We've seen that year on year, the provisioning number has spiked off a low base. But on a 3-year CAGR basis, no real major spike. And that's something which is likely a positive. Overall, it looks like a healthy set of numbers because the base is now low. It's been reshifted and therefore likely will be interesting to see how going forward those numbers will shape up. But that's on the income statement side.
Absolutely. So, well, Harsh, that leads us to the balance sheet. And of course, as you were mentioning, that the assets under management have certainly outpaced the top line, that is the net interest income. So if you consider the AUM currently, as we were talking about earlier, it stands at around 1.04 lakh crores. Of this, about 86,000 is gold loans, and it's seen a 31% year-on-year growth. And over the past 3 years, it has seen a CAGR of 19%. So this certainly is a healthier number. And in terms of its capital adequacy ratio, stands at around 27%, which isn't too bad. So, I reckon that in this case, we'd certainly give it a thumbs up. But Harsh, what about the other key operational metrics? You did mention yields to a certain extent.
Yes, so yields, very interesting play here. You're seeing yields come off fairly sharply. Yields now sit at just about 18% versus the 20% number just a couple of years back. So those numbers reflecting in front of you. But the other thing that's changed or improved is cost of funds. Cost of funds have also come off. Cost of funds maybe a decade ago was at 10%. It's currently sitting at sub 7%. So that shift in cost of funds has been healthy for sure. And therefore, some amount of the yield impact, the competition impact has been absorbed by the cost of funds coming off, but a lot of it translating to margin as well. So your margins have come off from 13% odd to around 11.5%, and ROAs sit at just below 6%. So that's how the operational metrics are stacking up. But look at the ROA number, look at the way it's come off from 7.2% to 5.8%. Of course, some of it asset quality, but a lot of it is yields.
Right. So you're giving up the other operational metrics a neutral rating based on, because the fact that it's mixed right now.
Yes.
Harsh, what about asset quality?
Yeah, so asset quality, again, another interesting one. Your NPA ratios have largely stayed steady, stable, around the 3.5 odd % mark.
Yeah.
This is one company which has been able to maintain asset quality at a decent level in cycles as well. And it has a good reputation to do that.
Right.
And that's why, and we'll come to valuations on that front, it's always valued at a slight premium in contrast to others.
Yeah.
Your net NPA and gross NPA ratios have largely remained steady for a business that it does. It's also listed its Muthoot Microfinance business, which is now a separate listed company. But that apart, it also has Belstar, which will eventually list again. So within the microfinance space, asset quality is likely to be a concern over the next quarter or two. It's something that investors should look out for, how NPA ratios stack up going forward. At the moment, things seem like they are under control.
Well, certainly. So that gives us an overall picture of how the company has done, with the kind of growth it has seen, its operational metrics, its asset quality, and that gives you a good picture in terms of how its book has been. We're going to talk about a handful of parameters beyond just the financial statements, and one of them is shareholding. Now, it does seem like the company is very well held. So firstly, we have about 73% held by promoters. There's been no dilution over the past few quarters. And in terms of, FIIs, there has been a little bit of a decline in terms of their holdings. DIs, on the other hand, have bought into. All in all, if you roughly balance it out, institutional holding also remains largely the same. And the public shareholding has gone up just marginally so, which is why we'd give it a thumbs up, because it's well held, not only by promoters, but also institutions in general. So it's certainly going to be a thumbs up. And then I'm going to come to street coverage right now. Now, at the moment, we have about 22 analysts covering the stock. It's a very well-covered stock, and it has been so for a while. And about 75% of these analysts still have a buy rating, with about 17% balance showing a hold. The question really comes down to what the price targets here are and whether or not it does entail an upside. But that really, it comes down to just about, 1% decline in terms of, return potential, which means that at the moment, based on consensus expectations, the price at which it is going at is fully valued, or rather, it's currently at a fair price, if that is one sort of an assumption that we can in fact make. But Harsh, the stock, I believe right now is at a life high, if I'm not mistaken, not on an intraday basis, but where it is, if it does close to where it is on a closing basis, it will be at a life high. How has the stock done?
It's done very, very well. And Agam, mind you, for all lenders, it's been a tough couple of years. You look at the larger lenders, they face their issues with regard to stock price performance. You look at some of the smaller lenders, they're facing asset quality issues currently. And therefore, it's really, really interesting the way in which this one has moved. 9% over the last month, 18% over the last 6, and 45% over the last 12 months. So 2024 calendar year has been a blockbuster for Muthoot. It's been a bit of a turnaround, and they've done very well both on growth as well as on asset quality, at least as of now.
Right.
And therefore, the street cred definitely deserves a thumbs up on this one.
Well, there's no doubt about that. And of course, not only has it beaten the Nifty, but also beaten, a universe that perhaps may belong to a little bit more. So the Nifty 500, or for that matter, even the mid-cap index. It has, in fact, outperformed by a huge margin when it comes to all these indices. But that also brings us to the picture of valuations, Harsh. Now, naturally, if it's trading at a life high, the chances are that it is richly valued.
Yes, and in comparison to some of the others as well, Manappuram is the is the best place in terms of like-to-like valuation comparison. And just look at that. By the way, those are all 1 year forward price to book. So 1 year forward price to book as per Bloomberg, that's how it's really stacking up. And look at some of the others. Shriram Finance is a nifty 50 company trading at 1.7 times price to book. Of course, the size is probably triple that of Muthoot, but nonetheless, right? I mean, 1.7 times just in terms of the comparison looks reasonable in that sense. L&T, Manappuram also trading at far cheaper valuations. And compared to the 5-year average also, Muthoot is trading at around 10% higher 1 year forward. And in fact, it's trading at 3.2 times current price to book, which is far higher than the 10% which I'm talking about 5-year average. And therefore, clearly on valuations, doesn't seem to be too comforting, but the stock has already given a very solid return. No reason for investors to complain, essentially.
Absolutely, absolutely, totally. Paul, point taken. So, you know, where does this take our overall ratings with respect to what the stock has done so far? Let's find out. So it's certainly a thumbs up when it comes to its income statement, balance sheet check as well, a thumbs up. We're giving it a neutral rating when it comes to its operational metrics and asset quality, only because the numbers and often a lot of these parameters are a bit mixed out there. Shareholding, street coverage and street credentials, very good. Valuation picture is a thumbs down. That perhaps is the only big thumbs down that we have, because it does certainly look like an expensive stock compared to its peers, which is why the overall rating for one for a thumbs up, well, half for a neutral rating, and one or rather no point for, well, neutral. Well, we have about 5.5 out of 8, which is not a bad rating at all. But let's move on and very quickly talk about the strengths, weaknesses, and opportunities and threats of this company too. So I'm going to take you through the strengths. Well, we do know, and as Harsh has also pointed out, it's a very well-recognized lender. It's one of the larger lenders, and certainly has a very strong foothold in the southern Indian markets, and it has a very strong secured gold loan business. In terms of weaknesses, again, something that Harsh has pointed out, intense competition with falling yields. And, well, lending tends to be a cyclical business, especially when it comes to this specific, area. But opportunities and threats, Harsh.
Yeah, large cross-sell opportunity, right? Yeah. It has a very large presence, 4,800 branches we spoke about, and therefore gives it a good, presence in terms of cross-selling to existing clients. It has a very good foothold in the gold loan market, and they would have enough data, I presume, to be able to cross-sell well to some of the other fields that they are venturing into, vehicle finance, microfinance, and the like. So all of that should hopefully aid the numbers going forward. Again, higher yielding business, some of these, and therefore should aid the numbers. The second one is it's a largely under-penetrated market. You look at MFI, you look at vehicle finance, you look at even gold loans to a large extent. Even though competition has come in, it's still an under-penetrated market overall. What are the threats like? One is the geographic concentration. But outside of that, yields could continue to fall. You could continue to see competition pressure. Banks obviously have far lower cost of funds, and therefore this could very well be a pocket where competition could continue to intensify. Not seeing that at the moment, but could continue to maybe going forward. Second is asset quality concerns. One in microfinance, if the cycle were to turn with regard to overall asset quality in the system, that could well be a big threat for Muthoot as well. And how some of the microfinance lending plays out, because Muthoot doesn't have that kind of experience in microfinance as it has in gold, how it takes care and deals with a turn in asset quality could well be something that you may want to look out for as well.
All right. Well, that sets us up for the conversation that we have with the management of Muthoot Finance. Well, we have with us Mr. George Alexander Muthute, who's going to join us right now. Well, Mr. Muthute, firstly, good morning, and thank you so much for taking the time out. It's a pleasure speaking with you after a very, very long time. Mr. Muthute, we've been through a lot in terms of your financials, and right at the top, what we did come across is your staggering growth, your exponential growth when it comes to your assets under management, which even on a CAGR basis have seen about 19% 13% over the last 3 years. In comparison to that, your net interest income also showing a near double-digit growth, just about it. The question really is that can we expect your net interest income to perhaps catch up to a certain extent with and in comparison to your AUM growth as we move forward into the next few years?
Okay, thank you. I just heard, just listening to the summary of some of the challenges, etc., which Muthoot Finance can encounter going forward. Okay, fine. I agree with the competitions, etc. So as far as the gold loan is concerned, this is our core business. 90% of our portfolio is gold loan. So we have about, last we have crossed the 1 lakh crore mark. So 90% of that is gold loans. That is one thing, something. The rest is maybe we have about 2,000 crores of other home loan, home finance, vehicle finance, little personal finance, etc. And maybe another 9,000 crores of microfinance. I'll talk about the gold loan business first. Today, actually, what is happening is in the last 2 quarters, gold loan business, the unsecured loans, unsecured personal loans, unsecured loans of any type, whether it is a credit card, etc., unsecured loans to non-salaried people are little difficult to come by because a lot of cautions and red flags have been raised by the regulator, by the by banks, everybody, that unsecured loans are little going through some headwinds. So what has happened is on the ground, we have 6,000 branches. On the ground, people are not able to get as easily an unsecured loan or maybe all these credit card or dues, etc. There's a big stress there or there's a lack of funding there. That is where the gold loan is coming as a big savior. We had a similar situation during the COVID time in 2000 when banks, etc., everybody in NBFCs went slow on loan growth. And that time, only gold loan was the savior. So we were able to support the people at that time. And today, to support people by putting purchasing power into their hands. They also understand something when without purchasing power at the lower level, the economy cannot grow. So Muthoot, by offering gold loans, we are able to put purchasing power in the hands of people. We had given a guidance of about 15% growth. That is what every year we give the guidance of 15% AUM growth for gold loan. And of course, as I was hearing the speaker saying that we were doing a CAGR of 19%. So some year we go 20%, some year 18%, some year 22%, etc. And this year we have actually, after Q2, we have revised our guidance from 15% to 20-25%. So probably after Q3 results are also out by January, we may have to revisit that guidance also. Depending on how we are faring now. As we see in the economy, there is good demand for gold loan. That business is growing. Yes. So when we said about cross-sell, I heard somebody saying about cross-sell. So some of our customers, when we looked at their credit score and their bureau reports, we find that they are taking personal loans, they're taking housing loans from elsewhere. So we thought, why not offer this to our customers? But then I was also hearing him saying about the expertise of Muthoot in these sectors. We don't have expertise in vehicle finance. We don't have expertise in personal loan. We don't have expertise in housing loan. But then we have started a different verticals with different CEOs for this. And they don't work out of the Muthoot Finance branches. They work out of something else. But only the customers, the leads come from Muthoot Finance. A customer who has taken a gold loan, we tell them that, yes, we can also offer a housing loan. Please get in touch or housing finance loan, get in touch with them. And they do their credit assessment. They do their underwriting. And they do their... So, but again, I will be wrong if I'm not completing about the microfinance also. Microfinance is another subsidiary which had a portfolio of about 10,000 crores, but now it has come down to 9,000. So microfinance is going through a stress. Everybody knows that.
Right.
We are one of the just one of the players there. So that is going through a stress. It usually happens every 4 or 5 years. Microfinance goes through a stress.
Right.
Probably the next 2 quarters, they will also come out of it. And that's what our hope is also there.
Well, that's good to hear, sir. Harsh also joining in. So I want to try and understand from you. So one quick couple of questions. One is with regard to growth. Do you expect 20% growth, that kind of clip, to continue for the next year or two? That's my first question. And can you hold on to the 17% yield that you currently have?
Yeah, I think I'll correct it there, because last several years, because after listing, we have now about 12 years, 13 years of listing. We have always given a guidance of 15%, but we have always done more than 50. But so when you ask me next year, 2016 also, or 2017, we will definitely give a guidance of 15% for the gold loan. But it usually happens that we are able to do more. Not that we want to give a higher guidance and achieve lesser. We would rather give a lower guidance and achieve higher. That has been what we are doing. So if you ask for the next year's guidance, etc., definitely it will be, we'll say 15% minimum, but we will try to do more, and we expect we'll be able to do more also. Second is about the yield. See, at one point of time, our yield was maybe 19, 20, etc. Now it is about 18%. See, 18% yield is also determined by the cost of our borrowing. The cost of borrowing actually has gone up in the last 1 year. See, our overall borrowing cost has actually gone up. So we will try to, we look not at the yield, we look at our net interest margin, which is about 9% plus or minus 0.5%. That is what we try to maintain. So if the cost of borrowing goes up, initially we will try to absorb it ourselves. But if it is still going up, we try to pass it on to customers. Because our customers are maybe the average ticket size is only 80,000 rupees. We don't think it is so interest sensitive that if the whole world, the interest rates are going up, gold loan customers will also understand that, yes, the borrowing cost is going up. So we try to hold on to some time. After that, we pass it on. But the important point here is we try to maintain our net interest margins. That we will try to maintain.
Margins to actually come off a little bit? Do you expect some squeeze on margins?
No, sir, I told you, no, sir. Sometimes for a 0.5% or so, we'll try to absorb it ourselves.
Fair.
Because it's only because of the borrowing cost. If the borrowing cost is really going up, every industry will raise their interest, and we also will raise the interest.
Small follow-on. What's the sense with regard to competition? You're growing so fast, there's so much competition. Just tie this up for us, not making sense to me.
Sir, competition is there only in a growing business.
Right.
A business which is not growing, nobody wants to enter. There will not be any competition.
Absolutely.
For gold loan, the market is quite huge, sir. There are so many people. 75% of the people with gold have not utilized this as a gold loan opportunity. So opportunity is there. If many banks are also coming, many NPAs are also coming, newer and newer players, newer and newer customers will start using this. After using this for some time, they will graduate to a personal loan or a business loan, etc. But till then, the market is very wide. So there are statistics there about 28,000 tons of gold is there in India, and only about 20% of that is come into the market. So the rest is still there. It is only the customers who should feel that, yes, I can make use of the gold, then go for gold loan. So as and when people make use of that, the gold loan business will start growing, sir. So the market is very wide, sir. Market is very deep. There's room for everybody.
Sure. So a final question from my end. Return on assets around 6%. Is that doable for you over the next few years?
Yeah, there also we give a guidance of at least 4. We try to do more. So we try to make, there is a little bit of high OPEX cost in every gold loan business. The OPEX is very high because we have to take the gold, check it, we have to keep it in safe custody. There are so many compliances, so many things are there, safety, security, audit, we have to do. We have to check each packet has to be checked because the branch, we have 1,000-number audit team to go to branches and check these things. So it's expensive, but then because the business per branch is also going up, we try to, because 5 years back our per branch business was only 7 crores. Today it's about 16 crores plus. So that operation cost also proportionately is coming down, but inflation eats into some of those costs.
So, Mr. Muthute, on that note, thanking you for joining us and taking us through all the various parameters of the business. We wish you a very, very happy new year. And we look forward to having many such more conversations going forward. Thank you so much for joining, sir.
Thank you very much, and wish you also a belated Christmas and definitely a very happy New Year for all the customers and also for the team.
You too, sir. You too. Thank you so much. Well, there you have it. That's the management telling us about what FY25 could potentially, 2025 could potentially look like. But Harsh, thanks for joining in. And that is all that we have for this edition of KYC. But stay tuned for more news and updates. You're watching NDTV Profit.